Hi Craig James with a look at the past financial year for the Australian economy and looking at the year ahead, the 2018-19 year. Well, the past year for the Australian economy has been a very good one. We saw the cash rate end the year at a record low of 1.5%. No change in interest rates over the last 12 months. And the Australian dollar is also helping businesses and the broader economy, with the Aussie dollar around about 73.5 cents. The economy has continued to grow. We saw 1% growth in the March quarter, 3.1% growth over the year. So very, very close to the speed limit for the economy. Business conditions remain good. In fact, the Business Conditions Index is just off the highest levels that it's ever been if we look at the National Australia Bank Business Conditions Index, and that's been running for the order of 20 years. Businesses are doing well because consumers are spending and exports sort of rising, and businesses in turn, they're investing and they're also employing. If we look at consumer spending, household spending growth is in the order of 2.9%. That's above the longer term average. Now, consumers are spending because they're generally confident, interest rates are low, and more jobs are being created. If we look at the jobless rate, the unemployment rate sitting at 5.4%. We saw in terms of job growth over the 12 months to January of 2018, more than 400,000 jobs created. Now that's clearly unsustainable, and we're going to see job growth coming off, but certainly it has been a good 12 months in terms of the job market, and job vacancies continue to rise. They're at the highest levels ever. If we look at wages are still somewhat disappointing in the fact that they've only grown by 2.1% over the year. It's still ahead of the rate of inflation, which is sitting at 1.9%. But that low growth of wages is one of the reasons why there's more jobs that have been created over the last 12 months. In terms of home prices, if we look at this time last year, the National Home Price Index was rising at something like a 10% annual rate. Now we're seeing basically home prices flat over the year. Certainly we're seeing more supply coming onto the market, and as a result a softening in terms of home price growth. Global economy has been very, very good. International Monetary Fund believes 3.9% growth in the global economy this year, 2018, and 2019 the same sort of growth. And if we're looking at the themes, well, we're finishing the financial year with the trade wars, so very much sort of in the focus for investors at the moment. And the other major issue is in terms of the high oil price and what that's meaning for the energy sectors as well as consumers and businesses. Well, what about the year ahead? Well, we're expecting the economy to continue to grow around about a 3% annual pace. And as I said beforehand, very, very much close to the speed limit. Exports and infrastructure should be key drivers of the economy over the next 12 months. Inflation sitting at around about 2% at the moment. We expect that it will gradually move up to 2.5% over the year. And we are optimistic that wages will rise as well from around about 2% at the moment. Could get up to the region of 2.5% to 3%. Certainly that job market continues to tighten. There's plenty of job vacancies sit out there, not a lot of staff. And we think there'll be further tightening in terms of the job market. In terms of home prices, well, I think we're going to get small gains or small losses in most of the capital cities in terms of home price growth over the year. So certainly not home prices going gangbusters as it was in the past financial year. Unemployment should still stay in the region of 5 to 5.5%, so good times in terms of the job market. For interest rates, we are of the view that inflation will rise, wages will gradually pick up, and eventually the Reserve Bank will lift interest rates. And we're penciling in early in 2019 where we see that first interest rate hike in the new cycle. For the United States, well, they may get 1 or 2 further interest rate hikes over the remainder of this year, 2018, and perhaps another 1 or 2 interest rate hikes over the 2019 year. But certainly inflation remains under control, and they're getting very, very close to where they need to be, the neutral level for the United States. In terms of the Aussie dollar, it may soften a little bit further in the short term as the US continues to look to lift interest rates. We may get down to 72 cents in September, but by this time next year, we think that the Australian economy will be continue to grow. There will be wages picking up, and the Reserve Bank would have started lifting interest rates. So this time next year, we're looking at the Aussie dollar between 75 and 76 cents. Things to watch out for over the next 12 months. Well, trade wars remain very uppermost in people's minds. Have to see how that one plays out. The oil price is relatively lofty at the moment. That has implications in terms of global economic growth and the outlook for individual countries as well. We do believe that it will continue to be a low inflation rate, low interest rate scenario. And if we continue to see that sort of theme playing out, then we will see investors continuing to focus on getting a good diversified portfolio. The degree of share price growth with small caps and medium-sized sort of companies, but also dividend yields coming from the banks, the telcos, utilities, and the like. We do have the small matter of a midterm election in the United States in November, so that's something to keep on the radar screen. And we will have elections in Australia, a federal election sometime over the next 12 months, and elections in Victoria and also New South Wales. So there's plenty to watch out for in the coming 12 months, but we believe it'll be another good year for the Australian economy.